Good morning, it's Andrew O'Donnell with Supercharged Stocks. We're here in London, and I get to speak with the one and only Mr. Rick Rule. It's a real pleasure that I get to introduce you today, but also to speak with you in person. And what's your thoughts on the day one finished of the conference?
I thought yesterday was a good day. London is always a good place in the mining business. There's 250 years of experience financing mining here. So there's a deep community among issuers, a deep community among investors, a deep community among dealers. So, yesterday was sort of this nonstop smorgasbord of mine finance. It began for me at about 7 o'clock in the morning with a breakfast meeting. It ended about 11 o'clock last night, chock-a-block the whole time. So it was wonderful.
That's wonderful. And what's your overall message or theme or outlook for the year coming ahead? I know I was at the Sprott show in Vancouver, very optimistic.
Certainly on the precious metal side, we continue optimistic. I believe that the wind is in the sails of both gold and silver as a consequence of, quote, quantitative easing and also negative interest rates. So I personally feel pretty good about the precious metal sectors and the better precious metal stocks. The lame, the halt, and the blind sort of TSXV issuer with no prospects and 65% of total expenditure in G&A. That's not going to work.
No, yeah.
But the real ones, I think, are through the hard times. Other materials, I think, are going to be tougher. Okay. I'm certainly no economist. I'm a credit guy, but I'm concerned that after 9 years of an economic recovery, particularly one that feels to me stimulated by artificially low interest rates, I'm nervous that we could experience an economic slowdown.
Yes.
And if we did that, the sort of supply-driven recovery that you would see in things like copper and oil and gas might be delayed a bit.
A little bit. That's my one hope, was that, is it possible in all this magical markets we have today that with it, I consider impending doom coming in some sectors, that is there a possibility that a shift of allocations of funds could maybe save mining?
I don't think so.
No.
Save mining. Mining will never go away.
Of course.
What the issuers and some of the speculators want is not a return of smart money, but rather a return of dumb money. And I think the sector's used up the dumb money for the time being. The amount of capital that the industry destroyed over the last 15 years was staggering. Yeah. And I think we have to make some people some money before they give it back. Now, the other side of that, speaking with my Sprott hat on, the return of very high quality generalist investors has already begun, but they're extremely picky in terms of high net worth retail capital too. We're opening accounts at a greater rate than we have opened them. Let me rephrase that. The pace of inbound account openings is the highest at Sprott it's been in 15 years. Okay. So the suggestion that there isn't money available for mining could not be more wrong. But we're in that sort of sweet spot now where there's lots of money around, but it's picky. Yeah.
And you're a good choice to pick. And you guys are the pick, really. So without putting you on the spot, what funds would you suggest, or what from Sprott, what are you kind of leaning towards without being showing favorites?
Well, listen, I can't tell your people what to do because that's giving investment advice to people I don't know. What we are doing for people that we do know is we're starting them off in the highest quality gold stocks. A student of history will know that in the context of the last 40 or 50 years, gold stocks are historically cheap. We are close to the bottom, at the bottom, or just off the bottom. A student of that same history would know that in 9 prior recoveries from oversold bottoms, the beta, the market itself, the indexes have given you between a 200% return and 1,200% return. Yeah. And they've done it over periods of time as short as 9 months or as long as 40 months. If you know that, then you think, what is the point in trying to generate alpha against that much beta? Capture the beta and de-risk it. Don't try and outperform it. So we try to begin portfolios for precious metals investors by, first of all, buying the metal itself, which we're attracted to, but also the very, very, very high-quality miners. Not an investment suggestion, but the big royalty and streamers, the Wheatons, the Franco-Nevadas, the companies that have proven to be reasonable asset allocators in the 15-year time frame, or at least the 5-year time frame. So names like Agnico Eagle, maybe still Barrick, which looks early on in a turnaround. We would suggest that people put at least 75% of their money in very, very, very good names.
Yes.
On the speculative side, my part of Sprott at least prefers silver names for the speculative bucket.
Okay.
Our experience has been that silver moves later than gold, but it moves further.
Yeah, okay.
And our experience further is that high quality silver stocks are very rare.
Okay.
And when the generalist money wants to come into that limited market capitalization, as my friend Doug Casey says, it begins to resemble siphoning Hoover Dam through a garden hose, you know?
Yeah.
So, a portfolio that was 75% high quality gold stocks and then 25% relatively high quality silver stocks would seem, from my point of view, to be appropriate here. People who are willing to educate themselves, people who are willing to come to Mines and Money, willing to prowl the aisles at PDAC, willing to read quarterlies and annuals and proxies, those people who are willing to work between 10 and 20 hours a month can afford to speculate.
Yeah.
But my experience has been that while most speculators have good intentions, they have bad practices.
Yes.
And they should limit themselves to much higher quality names.
Much higher quality. That's perfect. Well, I appreciate your time.
Pleasure.
We're going to have to speak here in a minute, but
I look forward
once
to that.
again, a real pleasure to be speaking with Rick Rule, and we've got some great insights for the year coming ahead, and enjoy the rest of the conference.
Thank you.
Thank you.